What's up, party people, on a Thursday? Thursday already? Nice thing about a 4-day week, huh? For those of you counting at home. I don't know what day it is. We work every day. But that's what happens when you set yourself up to serve people in a 7-day-a-week business. All right, let's get down to it. So VA loans are winning in California right now in a major way. It's just awesome to see. It makes me happy. It does. It makes me happy. It's been a rough couple of years. It has been. We've got people all over the state of California, Northern California, Bay Area, Los Angeles, Santa Cruz, San Luis Obispo, Oakland, Los Angeles, Riverside County, Southern California here in San Diego, all throughout the San Diego area. We've got veterans who are pre-approved for VA loans. Thank goodness some of them saw this channel too, because my word, a lot of these people I'm talking to are from YouTube, and they have already been pre-approved. They got a quote, they found the channel, and they got a better deal by going with us significantly. In fact, I'm working with one right now that we got recently here, and just dramatically worse terms that they were getting. So many fees, much higher rate. I mean, it's like this charging a lot of fees, but the rate's a little bit lower. So, no, both higher rate and a bunch of fees. We don't charge any fees. So right now, VA loans winning all over the state of California. Of course, my company, we could do loans in other states as well, but I focus mostly on California. And we're winning right now, getting offers accepted, getting closing costs paid by the seller. I mean, it is a VA buyer's dream right now. You can negotiate the heck out of it. You can get into a house with almost no money or no money out of pocket. This is the VA dream, from a real estate perspective. Truly remarkable. So a couple things on that front. Listen, if you are a realtor working with veterans, you gotta make sure you're putting them in good hands. Okay. Do that for their sake. Some of these banks, they have higher rates, they have fees. Like, take a look at that. Before you refer these veterans out, refer them to me. I'm a safe place. I'm a safe haven for VA loans, for anybody, for any loan, but particularly for the veterans. It's my passion to serve veterans. So we're winning. All right. Now we're going to take a look at a couple things today. We're going to look at mortgage rates, which have spiked. They spiked. It's still not that bad though. It's really not, but they have gone up. So we're going to take a look at that. We're going to look very closely at it. Also going to look at what the Fed chair said. I'm going to show you the dollar is getting so much stronger. The dollar in the last few months is up 10%. A dollar is strengthening. That's typically something that happens during deflation. So how can we be in this extreme inflation and have the deflationary dollar? Your cash is up 10%. Isn't that weird? A few things like that we're going to talk about today. Also doing an event next week for realtors. If you're an agent, check this link out. It's all about marketing stuff. Just basically how to present yourself appropriately based on the strengths of your business. It's ABCs are the things that for your business. You structure your business according to what your customers are looking for, and then figure out the best way to convey and communicate that. That's what we're going to discuss there. So come check that out. Seating is definitely limited there. RSVP, I know at least half of the seats are taken on that already. And we just started talking about it this week. So let's go here first. Actually, let's do rates. Everyone wants to talk about rates. So let's go here. By the way, we're live across multiple platforms. And what's up, Karen? She says, hopefully more in San Diego. Hey, I've got VA buyers winning all over the state of California right now. It is awesome. And I encourage VA buyers, veterans who are looking to use their home loan benefit, contact me. We can help you win as well. You won't pay any BS fees. You will not pay higher rates. Too much winning. That's right. Now it's never too much winning when we're talking about our service members here. Okay, so let's take a look here. So we had a lock alert that went off today. I got one locked in, fortunately, before that happened, which was really good. And it's just been kind of a rough run here. Let's just be honest with ourselves about this. And it's been a bad run. This is what we're doing right now. That's what we're doing. We are in a downward channel on bonds. This is not good. Not good at all. Not what you want to see. This is rates going up. That's what rates going up for a month straight looks like. Just sort of death by a million paper cuts. But you see the consolidation taking place here. I mean, you see this looking like it's trying to form some type of a bottom. Now, it's not a real pretty bottom. It's not a super obvious one like we had back here with these long wicks kind of signaling to us that, like, hey, the floor has been set, right? We don't have that, but we do see some consolidation going on here and hoping that we can bounce out of that. I'll tell you one thing, bond prices are higher now than they were when rates hit the previous peak. So if we actually take this here and zoom in a little bit more, and I'll put all these links in the description. The last peak we had was June 23rd. So on June 23rd, that was a Thursday. So it was a week before that. Remember, all this data is lagging by a week. We're at 5.81. Now we're at 5.89. So rates have gotten a little bit higher, and that's through last week. Rates have gotten higher this week. So this number could very well get to the sixes when next week's data comes out, which is the data from this week. But once we get the release next week, we're probably going to be in the sixes, I imagine, for this. And so while that's going on, buyers' demand is just carrying on. Demand to purchase real estate all over the state of California, from my perspective, and particularly in San Diego, there is a strong demand there, very, very strong demand that is just relentless. It's just relentless. And even with these higher rates, even though we're up here, you would think, oh, okay, well, this is the time now. No, it's been somewhat normalized, the expectation of interest rates. It's just not as shocking. And so that's what we're talking about, normalization for a market. Like, when does the market actually get to a point where, some of these things that were shock and awe sink in and become more normal? I think we're experiencing that now. That's going to help ultimately for prices to sort of stabilize, demand to sort of stabilize. We're seeing the demand increase right now. Really, really interesting as inventory is decreasing. So rates have gone up. So that's a fact. We don't have great news on this front. This doesn't look great, other than it's possible we're putting in a double bottom here. The previous bottom over here, bottom right here on the same, pretty much the same spot. That could be nice. This has been a slow sort of downtrend, just a trickle down. So it's easier to bounce higher off of those and make big, strong moves. So hopefully that'll be the case. We do have the strong dollar. We did look at, the S&P. It's bounced off. It did. Look at that. Bounced right off of the technical, the golden pocket that we called out. This was last week. This is the daily chart. So last week we said, hey, we got to watch out for this. Went down, touched inside the golden pocket, and has rocketed higher from there. I'd say that's a pretty good sign. Even blowing through the 50% retracement today, that's a pretty good sign. So now what are we looking at for stocks? Just to quickly show you on this. Let's go. Let's see, where is the next golden pocket? We could easily see a sort of a slow increase up here, and where we're going to revisit this golden pocket on this reversal and the downward trend line. That might be where we're going to find out where the test is for this market. In other words, can the stock market get through this downtrend that we've been in for so long, or are we going to continue to get rejection and move lower? It's very hard to say. Recessionary kind of situation that we're in, you would expect more downside. But remember, the best time to buy and bottoms always look super bearish. Like, if you were to go back here and look, let's say in 2008 or something, when the market was not weekly, let's do monthly. When the market was really, really bad, when you go back and you look at it, it would look terrible. So here it is right here. That's the monthly. I mean, if you're just right here in it, it looks terrible, right? But that was ultimately the best buy zone, was right there, March of 09. And if you bought there, all that's happened is you've just won, just grinded higher off the charts. So, it looks the worst at bottoms. That's one thing we got to keep in mind. I think a lot of people, as they see things, materializing, think that, oh, okay, well, there must be more bad things coming. There could, but when you have sort of a situation where a lot of things have come to a head, things don't look great, that actually could be a sign that it might be the right time to get in. So it definitely was on the real estate side. You guys remember when the market teaches you a lesson, let's make sure we don't forget it. And a lot of people have wondered, how could you be so bullish on real estate through all this, through all the news articles, through all the fear mongering? because I've learned to listen to the market. That's the only reason. COVID was a truth serum about the way that people perceive the value of real estate. And we should damn well heed that. So COVID hit, we had a nationwide pandemic. They told us a worldwide pandemic. They told us people were going to be dying in the streets. I mean, it was horrible, worst case scenario for everything, right? It was terrible. And real estate went bananas. So the rubber met the road. We got to see that. We know what that looks like. In a worst case scenario, people run to real estate and they can't stay away because it just makes so much sense. And so you're seeing that now. I do still see opportunities in this market. I don't think we've bottomed necessarily just yet, but I think we're in a bottoming process. I think the majority of the downside you're going to see in this real estate market is already here. Maybe there's a little bit more, but the majority of it is already here, which means we're in an opportunity zone. If you are that VA or FHA buyer, you need closing costs or you just want closing costs, now really is your time to strike. Now is your time where you can win, where you can come in and you can go, you know what? I'm a trigger puller. Get me in the game. Put me in, coach. Let's do this. Because so many buyers have exited stage left. Please. They just left. Some buyers really, truly will only feel comfortable buying in a market that is on its way up, where there's lots of other people who want in. Like kind of a herd mentality. I want to get in when everybody else is getting in. And you can do that, and it can still work for you. But a more savvy approach is when other people aren't interested, that's when you're going to get the best deal. We still have some of that happening right now, but truthfully, technically, and I went through this, and I'm not going to do it in this video, but I went through a very deep analysis today. And technically, we're still in a seller's market. And there's a guy too, oh man, what's his name? Who published a report today, Stephen, dang it, Reports on Housing. I can't remember his last name right now. Really, really good. And he said the same thing. We are still technically in a seller's market. Homes are not staying on the market that long. Inventory is super low. And technically, we are still in a seller's market, which means if a seller does the right things, if you're going to sell your home, it's important that you do the right things. That's why it's important you have a really good realtor, because they will guide you to do the right things. If you do the right things to present your home, to market your home, you're going to be able to create a seller's market for yourself and get multiple offers and rule the roost. That is still possible for sellers. Most sellers won't do this, and therefore opportunity for us buyers. By the way, I'm a buyer in this market. I'm looking at real estate every day. I am also pulling triggers. That's right. And I'm cool with it. I love it. I love this market. It's perfect for buyers. I represent buyers. I am a buyer. Why wouldn't I like it? What's not to love? So this is a good one. Fed Chair Powell, he vows. Whoa, we're taking vows now? He's vowing to raise rates to fight inflation until the job is done. That's what he said, until the job's done. Now, this doesn't mean that they're necessarily going to make huge increases in interest rates, but it does mean that they'll probably still continue to put chips on the table. And I don't think that's a bad idea, because truthfully, they should have done it way earlier. They could have done it at this pace earlier, and we'd probably be behind us now. Instead, they chose this pace later, and so now they're going to have to do it for a long. And that could just cause more drawn out issues with, stock market and other things that are negatively impacted by this. But that said, this isn't a bad thing. The markets didn't love it, but it's not a bad thing. Fed funds rate now between 2.25% and 2.5%. That's not a bad place to be. Probably going to jack that up closer to 4% when it's all said and done, maybe mid threes. But you can check this out if you want to hear it from the horse's mouth. I always give you the links because I want you to do your own research. Also, always check this out. Mortgage News Daily. The link I posted yesterday is great for checking interest rates every day. This gives you more of a historical viewpoint. So we'll put that one in there for you. Analysis right now on mortgage bonds is not terrific. It's not terrific at all. I have to be strategic with locking, and that's really my forte. I consider that to be one of my major skill sets beyond communication and availability for people. as far as providing value is locking at the right time. Being a broker makes it a lot easier. I can flip banks, so I can lock you today and then lock you somewhere else tomorrow if rates get better. So that does help a lot. But that is something that is crucial in this particular market right now. Yes, Rolo Tomasi in the house. What's going on, brother? Let's bounce. Let's do this. Let's go. What are we waiting for? Appreciate your comments there. All right. So here's what I'm going to do. I'm going to throw this up. I'm going to encourage everyone. If you're a veteran, you have that ability to use a VA loan, want to buy a home, even if you're an FHA buyer, you want to buy a home, this might be the best time you're going to see in California for some time. I could be wrong. I've been wrong before, I think. But this is something I feel very strongly about. We have an opportunity right here to take advantage of. We have an opportunity right here where their sellers are showing weakness. They're reducing prices. But you know what? We're really not going to be in a true seller's market until the buy-side agent is making 3%. As long as the buy-side agent is making under 3%, you know sellers are still in control, because that's ridiculous, first of all. But second of all, they haven't gotten to a point where they have to ask for that. They haven't got to a point where they need to offer that, I should say, in order to get homes sold. But will we even get to that point? We might not even get to that point. We may actually not truly, technically be in a buyer's market through this cycle. It may not be. It may not happen. Either way, anyone you know, get a quick free loan quote. Call, text, email. That's my phone number. That's my email address. Don't need to pull your credit to give you a quote. Okay. No one should ever have to pull their credit. If you just want to get a quote, you can do that very quickly and easily. You're going to work with me. You're not going to get passed off to somebody. This is my thing. Okay. I do have team members, but you don't talk to them. You talk to me. So if you're getting a VA loan, whether it's a refi or a purchase loan, be very careful. Do not pay fees and double check your rate. You want to double check your rate with me? Hit me up. Even if you're in a state, if you're in Maryland, okay, that's a state out on Linden, that's okay. Like, hey, I'm buying a house in Maryland. Here's my situation. Am I getting a good deal? Or email me your loan estimate. Here's my loan estimate. Does this look okay? What should I ask? What should I say? Let me help you. It doesn't matter if I get to do the loan or not. I mean, getting to do the loan is great. Of course I want to do the loans. But if I can't do the loan, I can still help. I'm here to help. Okay? That's what I'm doing here. And I'm here to help you. So utilize me whenever you want. That's what I'll be here for. Okay, team. Let us pray to the interest rate gods for a little love tomorrow. We need to come off of this. It's time to bounce. Time to make it happen. I'll see you soon.